Well, good morning, afternoon, evening, wherever it is that you're joining us from today. I'm Brett Waters. I've been in Silicon Valley my entire life, and today I teach entrepreneurship at Stanford University, and I run the Fourth Lee Startup Accelerator. So, there's been a lot of discussion in recent years about the funding gap. We all have seen the numbers that something like less than 3% of all venture capital historically has gone to female founders, and the numbers for people of color are even worse. My sense is that that's beginning to change, but I know many startup founders today still worry that their identity will make fundraising difficult. And I always say that raising capital is hard enough as it is without feeling as if you are starting out at a disadvantage. So we've put together a great panel here this morning to talk about this topic, to basically talk about how can startup founders in 2022 break through, raise capital, build companies, and thrive. And as I said, we've got a great panel here, and I'll just kind of add them here quickly. Ashley joining us from Baltimore, Maryland. Good morning, Ashley.
Hey, Brett.
And Buki joining us from New York. Buki, good morning.
Hi, good morning.
Maria, buenos dias, joining us from Silicon Valley, California.
Hi, Brad.
And John joining us from Indianapolis.
Hello.
Correct? Yeah, John
I
joining us
am.
from Indianapolis. And joining from San Francisco is Tanya. Morning, Tanya.
Morning.
In my time zone. So I've got my coffee. Do you have yours?
I've got tea going, but yeah.
You've got tea. All right, you're a tea person. All right, that's good. Tea is good too. So I wonder maybe to start with if I could ask each of you to just briefly introduce yourselves to the audience. So Ashley, I'll have you go first.
Yeah, sure thing. Hey, everybody. My name is Ashley Williams. I'm the founder and CEO of Calm, which is an emotional health software for young people. I'm based here in Baltimore. The work that I do is literally like an extension of my total heart passion. So I feel very lucky that every day I get to get up and live out my dream. And I'm really excited to be here.
Awesome. Buki.
That's great. Hi, everyone. My name is Bukia Deba. I am an investment principal with Women's VC Fund. We invest in businesses at the Series A stage that have women in senior leadership. So our firm was founded to address some of the issues that Brett just mentioned. And so I'm happy to be on this panel. I talk to diverse founders all the time.
Awesome. Welcome. Tanya.
Hi, everyone. I'm Tanya Menendez, co-founder and CEO of Snowball Wealth. I started my career at Goldman and started another venture-backed tech startup prior to Snowball. And Snowball is a platform that helps women tackle debt and start building wealth. And we do that through tools and through coaching.
Very nice. John.
Hi, everyone. It's an honor to be on this panel. Thank you for having me. I am the founder of Kind Capital. Our goal is to connect capital to impact in a way that is scalable, sustainable, and more importantly, profitable. It's the only way that you can scale impact. My background was starting as an investment banker in early parts of my career, and then I transitioned to philanthropy. I was at the Kellogg Foundation, where we basically ran their mission-driven investments portfolio, which is a $100 million portfolio, across a bunch of different verticals, geographies, stages, and then switched over to Lumina Impact Ventures, where I built the impact investment strategy and focused exclusively on edtech, and then decided that Kind Capital had a slightly different model that's very integrated in how we think about supporting entrepreneurs that are underrepresented.
Very nice. Very nice. And last but not least, Maria. Oh, you're muted, Maria.
Hi, everyone. My name is Maria Palacio. I am the co-founder and CEO of Ageism Coffee. I myself am a fifth-generation Colombian coffee farmer, and through seeing all the struggles that our community goes, all the ways that they produce about 15% below margin, we founded Pajani Coffee with a mission to lead farmers out of poverty, and we connect the farmers and the consumers in a very meaningful way.
Very nice. Very nice. So let me start with a really simple, straightforward question, which is, if there are startup founders on this call who are concerned that their identity will make raising capital a challenge, what advice would you give them? Ashley, what advice would you give a founder today?
The first piece of advice I would say is to just accept what is. You know, accept what is, but don't let what is stop you. Just accept that challenge. And then the second piece of advice is sort of think about the way that you expend your energy. I always like to think that I have a certain amount of focus and attention that I can offer to any one thing. And I also think that the fulcrum tips in the direction of our greatest effort. So if some of your energy is, or a lot of your energy is going towards the system is not working, things are unfair, it's really challenging, you know, you're sort of diverting energy and attention that can go towards, you know, making it happen. So that's sort of my 2 cents, you know, like it is what it is. It's not fair. It's not right. It's not justified. But we can move forward anyway. There is a way forward anyway. And especially at this time period, I mean, I think 2021 saw more investment in people in color of color than ever in American history. So it's really about being able to seize that opportunity instead of focusing on the lack. And offering your attention and making yourself competitive, because that's incredibly important. You have to study the science of entrepreneurship and make yourself undeniable so that when you show up in the spaces where people are giving capital, let me listen to her, let me listen to him, let me listen to them, because what they're saying makes sense. So do everything that you can to make yourself competitive in the landscape so that you can play fairly the same way that entrepreneurs who are not of color are doing.
Sounds like wise words. Anybody else want to jump in on this topic?
Well, I agree with everything Ashley said about where you put your energy. I think that's probably the most important thing, right? And I know that's difficult to control. The other thing I'll say is don't internalize other people's bias, right? So I had a boss one time give me the advice of, you know, when you go into a meeting and you're taking feedback, be conscious of the fact that sometimes feedback is great and it's meant for you and it's spot on and you need to go back and work on those things. And he's like, and sometimes the feedback you're getting is nonsense. You know, and he said this to me as a manager who was giving me feedback, right? He's like, the person who's giving you feedback isn't always correct. And sometimes we give anyone who is in the position of, you know, I think sometimes, you know, the power dynamic with VC is like, it feels like the VC has the power. I don't actually believe that's the case, but so we give them a little bit more credit than they deserve. So don't internalize people's biases. If someone doesn't understand the product that you're building because they don't understand the group of people you're building it for, and they critique you in that way, try to separate that, right? Like there are a lot of times where VCs aren't seeing the vision because they don't understand how to serve women of color, for example. So just make sure you're able to separate the feedback they're giving you that's real, legitimate feedback from the feedback that's more about their own biases and them not understanding. So that's why it's important to cast a really wide net. So agree with everything Ashley said, but just as you go out there, you know, people's biases are their own biases. Don't internalize them too much. Be able to decipher good, solid feedback about your business from this is a bias and they don't really understand the market I'm trying to serve.
If I can jump in, I would echo everything that Bouquet just said, and certainly agree with what Ashley had mentioned as well. I would add, you know, think about who you're talking to. There is a lot of inflow of capital, particularly in 2021, that supports underrepresented entrepreneurs. So seek them out. There's a lot of capital that hasn't been deployed. So you might as well focus on the areas where you are at an advantage. You're not at a disadvantage. You're at an advantage that you can capitalize on. So take those opportunities and go after them. So that's one thing. For traditional venture, you know what? There are going to be biases that you're going to struggle with. So how do you make yourself look like any other business that's better, right? Because as a venture capitalist, the goal is to make money. And if I see data points that demonstrate your ability to make me money, I don't care what you look like. I don't care what your race is, your gender, your sexuality. It doesn't matter. If you can demonstrate that you can make me money, I will back that company. So a traditional venture capitalist is going to look at it that way. So I think the key point here is that know who you're talking to and frame your discussion points, emphasizing where you're going to have an advantage. The ones that are focusing on underrepresented entrepreneurs, play that out. Talk about your biases that you've got to go over and obstacles you got to challenge and basically overcome. But for traditional investors, just focus on the metrics that make your business look as good, if not better, than any other business that they're looking at. That's it.
That's good.
Yeah, I really like everything that Ashley, you know, I echo everyone's. But one thing that it resonated with me, what Ashley was saying is leaving that victim side on the side and coming with power. I remember when I started raising, I didn't know much about it. And we got a mentor. And he said, first do a list of 100 VCs. And the moment you hit 50 no's, then you'll be closer to your yes. So it really put me in perspective where a no wasn't a rejection, but getting me closer to my goal. I also understood that there is a language that we need to learn how to speak. You're entering into a whole new world that you really need to learn how to present yourself. And like what Ashley was saying, really getting prepared to be in that meeting, that you come with power and you own your business. One of the things that was really interesting for me was understanding that I was coming to these conversations with power because you're giving them a piece of your company. And so you're allowing them to make money of your idea. And so not coming with that victimized, but really coming with that power, but owning your numbers, understanding also what that VC is looking for, what is their strategy. And many times it's alignment, right? It needs to be what is their thesis, what are they investing in? Are they investing right now in that, in your sector or not? So doing the research so you know how best to communicate to that investor.
Tanya, you have everything you want to get in here?
Yeah, I absolutely agree with what's been said. Especially, some things that resonated with me especially was kind of accepting reality. Like you hear the statistics for women, and for Latinas it's even lower. I think that only less than a percentage of venture capital went towards Latinas. And so I think that if you dwell on that too much, it can just be detrimental. So I recommend, knowing the facts and understanding them, but don't let them become your something that you think about too much or obsess over, because it's just a waste of energy. And then the other thing that helped me a lot is kind of similar to what Buki said, was finding the believers. So there's going to be, when you're fundraising, there's going to be, it's expected that a certain amount of people will not believe in your company for whatever reason, but you will find some people that do believe in you, whether they're other founders or funders, and they do want to support you. And part of that is a numbers game, like Maria said, and finding the right people that align with you. The one thing that I'll add is that I think fundraising is a big part of it is a mental game and of endurance. Some of it's endurance and some of it is of confidence, right? So what are the things that you can do in the morning or before your meetings to increase your level of confidence as you're walking into a meeting? Part of that can be preparing and researching, knowing your numbers, knowing, the inside of your business. And then the other part is having, I think, a support system where you do have those rejections, and you can say that they don't affect you, but it affects, this is your baby. This is something you've been working on, you've been sacrificing for. And so sometimes the rejections can hurt. And so when those do happen, having the right support system or kind of coping mechanisms to be able to recover so that you can go into the next meeting with the same amount of confidence and enthusiasm. And so those are some, I think, tactics that are a little bit more tactical. The last thing that I'll say is that I do think that, some people can be more natural fundraisers in a way. So maybe they're, they enjoy kind of meeting and they're more extroverted or they're more charismatic. But I do think that fundraising is a skill that you can learn. So I wouldn't be discouraged if you don't feel like you're a natural fundraiser, or, you know other people that are more natural than you are. But I do think that it's something that can be learned and practiced. And with that practice and with some of these skills that you're building and coping mechanisms, you can make it happen.
That's very good. If anybody in our audience has questions, by the way, please type them into the chat box. And Ashley, you've got a fan out there who's giving you a shout out. So.
Hey, Miguel.
So, Maria, one of the things that John said, he said something about find sources of capital that are looking for people like you. And I think that you you successfully did this, right? You successfully found some Latina or Latino focused capital sources. Can you tell us about that?
Yes, I did when I started. I remember looking for VCs and I made a list and I realized I was going to meet a meeting and like, I'm not resonating, and why am I not resonating? And I'm wasting their time, I'm wasting my time. And I understood that, there's a segment being an impact driven company, then a Latina and a female, your choices start getting narrower. But I use that as an opportunity. So I started reaching out to impact investors, Latinos investors. So right now, all the people that actually invested are, Latino investors or impact investors. And I realized that the moment I start reaching out to my right audience, it's kind of like going to market with your product that you need to, communicate to the right person. I feel like it was the same as fundraising, finding my right audience that they were going to be excited about supporting my company or my background. There is a really strong, numbers around Latinos and Latino businesses and what this cohort is going to represent in the long run. And so there is a lot of funding going around towards Latinos to be able to boost our companies and put us at a advantage in this economy. And so that was very, very successful. We raised with LatVC, which is a mission-driven company, to fund Latinos. And it was very interesting once you start having those conversations with people that actually care and see your vision. I did had one conversation randomly where the person was like, I hear your accomplishments, I see your numbers, but someone that had done that doesn't look like you, so it's hard for us to trust.
Right.
And you're like, okay, so you're not my right audience, you're not my right VC, and so that helped me focus on what was my
that's
part.
good. That's good. Yeah, I actually would generalize some of that advice, that I think it's important for anybody who's out fundraising to do their research on investors before you meet with them, because most investors do have a particular sector or stage that they focus on, right? And so, if you've got an early stage tech company, don't go pitch an investor who's a growth stage med tech investor.
Exactly. Right? Yes, I also find that being a mission-driven company, I was going to find some VCs that like better my numbers or like better my mission. So I built 2 decks. One for those that they just wanted to dig into our mission impact, and one that just want to be like, okay, I love mission, but what is what are your numbers?
Right. Yeah. I think this is actually really good advice. Is build, build multiple decks and show the deck that is the most targeted for this particular meeting. And Maria, you were talking about how you made a list of 100 and going down them, and as you go down them, the personas will emerge. Right. You'll realize that there are, maybe there's 4 different personas. There's the investor who's interested in the impact side. There's the investor who all cares about is the economic model. There's the investor, right? And so do your research beforehand so you know which deck to bring. So Victor asked a really good question, which is a couple of you mentioned become fluent in fundraising speak. So how do you do that? How do you learn fundraising speak? Anybody have thoughts on that?
I mean, I would start with using resources that you can find online. I used to work with a firm called Rebel One Ventures. They publish a lot of video content that walks you through fundraising step by step, and so that'll give you a lot of the lingo. Going through accelerator programs also is really helpful because usually it's a step by step process. So when it gets to the portion where you're talking about fundraising, they'll talk you through fundraising in a way that's tailored for your stage. I think sometimes the mistake that people make, right, is that when they're looking for podcasts, yes, I saw that. That's a good one too. I think sometimes when people are looking for content related to fundraising, they're not looking at stage-specific content, right? So there is actually a pretty big difference between trying to raise a pre-seed round, pre-seed or seed round, and trying to raise a Series A round. A really big difference in terms of what the investors investors are looking for. And I've seen people trying to, we invest the Series A stage, and we get so many decks that are earlier stage, to the point of that you guys were making before about doing your research. I mean, 50% of the people I say no to, I don't even have to look at their deck because they just don't fit for some like very obvious big reason. But what happens is that people will go out and they'll see content about people raising Series A decks, and they'll feel like they have to meet that standard, and that's not the case, right? Like if you're raising a pre-seed or a seed round, you're more selling the idea, the team, and the market, right? The opportunity in the market, versus if you're raising a Series A round, I want to see results, right? Like you've actually been a company that's been in existence, you've raised money. So just make sure that you're tailoring it to the right stage and finding resources that fit the stage. I think that's the biggest thing. And then also have conversations with investors where you're not trying to raise money, right? Like you could like reach out to people and have conversations and tell them, hey, I'm early on in my business. I want to fundraise, 6 months, 9 months. I want to understand what I should be thinking about, what I should have in mind, because they're going to give you the most direct feedback. And go ahead and reach out to investors that you would eventually go back to and ask for money. That's okay. But having those conversations sooner usually makes them feel more invested in your business. And then if you come back to them 6 months later and they can see growth, they're more likely to buy into what you're doing.
Yeah, I think that is a really, really great tip. That you'll always get a better response rate asking for an informational interview. In other words, if you ping somebody and say, I'm not fundraising right now, I'd just love to get some feedback from you and some thoughts, people are likely to say yes to that. And you learn a lot in having those conversations, and now you have a warm contact that you can circle back with in a few months.
If I can add,
yeah, please, John.
To Bouquet's comment, it's never too early to start a conversation. Just understand you got to be respectful of people's time. But what I've seen with some of the later stage investors where they were not the right fit for some entrepreneurs, they started the conversation. Those late stage investors will have early stage investor friends.
Mm-hmm.
And so they may refer you if they like you and think you are a good fit for those potential stakeholder partners that they have in their Rolodex. And that potentially feeds to their pipeline later on if you actually make it through the next growth stage where they are a better fit. So just keep in mind that building your network and relationships early, not when you need the money, but as early as possible, is always a good thing.
And can I speak to the question in this that someone put in the chat?
So
that's one of those things that's like so frustrating, right? Because you can't control that behavior. It's a pet peeve of mine. I feel like I've been in similar situations as a fellow investor talking to like white male investors. So one thing I would say is enter the meetings and have a good sense of what your key metrics are, right? And it doesn't have to be, because I realize it doesn't flow with the story of a deck sometimes to just be like, these are all my key metrics, like in the middle of your deck. I totally get that. But I've seen someone put it into the appendix. So they had 2 appendix slides that just like summarize like really key high level things about the market, about the business. And then they would say, as I mentioned before, or flip to the appendix and you can see. And you don't want to be rude, but if someone's asking you questions that are super, super basic, like at, things that you've already covered or addressed in the deck, you don't want to call them out in like a harsh way and say, hey, you're being really offensive, like I'm not dumb. But you do want to say something like, oh, I mentioned that before, or I've laid everything out clearly in the appendix. You do want to say something. You want to push back just a little bit, because I think that will kind of signal to them, okay, like maybe I'm asking them ridiculous questions. So I think it's okay to push back. Obviously you want to be careful because you're still fundraising, but say something about it. Say like, oh, I did mention that earlier, or I have laid this all out clearly for you. But yeah, that's one of those things that's hard to avoid.
That's good. So Tanya, you've recently done a raise for the new company, right? Tell us about how that process went.
Yeah, and I also have a few things to add from the previous question.
Great.
But to be honest, I forgot what the original question was. What was the original question?
The one just now?
Mm-hmm.
Before this one?
No, I think before that.
Oh, about how you learned to speak fundraising?
Yes, yeah. So along with that, along those lines, like, I think that besides, I think first YouTube was a really helpful resource for me. So I looked on like YC's YouTube channel. Also panels like this are often recorded and uploaded to YouTube. So I think that listening in on panels like this, in addition to Allraise, I think that Allraise has had a lot of resources that have more closed conversations. And so people tend to be a little bit more candid in that, which I find to be helpful. The other piece that I think is, and that I did, in my last round, and then I'm doing in this upcoming round that I'll be raising, is practicing a lot with other founders. I think that is by far the most helpful strategy before you start fundraising. So having them look over your deck, having them look over, do just role playing and practice pitches, I think are really helpful, especially because while talking to investors early on can be helpful in starting to build a relationship, I think the reality is that they're still going to be judging you in some way. So you still want to have some preparation prior to going into this conversation cold. So I find that practicing with other founders is a great kind of low risk way to practice your pitch and to get some of the kinks out. The one thing that I will say is that it is helpful to practice with a founder that's already raised or that has been raising, because they know the questions that are going to come up. And vice versa, and they can give you kind of candid feedback. So I think that was one way that I did it. And then also because my last company was in manufacturing and was also a B2B marketplace, I then had to transition for this new company to B2C and fintech, both of which are very challenging endeavors. And I knew that going into it. I kind of accepted the fact that it was going to be difficult because it is just a space, and especially kind of with our profile. And so what I did was I reached out to other fintech founders and got a sense of what the common questions were, what the important metrics were in this industry specifically, because I do think it's industry specific. And also just like the trends and themes that people are seeing, the valuations that they're seeing, like all of that. I kind of did a lot of my research by networking, by connecting with founders and asking other founders to connect me to kind of fintech specific founders. I do think that accelerators are extremely helpful. And I think that participating in more than one accelerator works too. So I did On Deck, the fintech specific track, and I also did StartX. And both of them didn't take any equity, which was helpful, but they provided a lot of resources that were also different and sometimes conflicting, which I think is great. Understanding that not all of the advice that you get is going to be consistent, and then you can decide what's right for your company and what's right and authentic for you.
So Tanya mentioned AllRaise, and I put their website into chat because it's a good resource, allraise.org.
Brett, one other thing that may be worth mentioning is as you think about who to reach out to in positioning and practicing your pitch, building an advisory council or an advisory board that can bring you strategic value, that is extremely helpful. And just pick the areas where you're weak and find a potential advisory council or advisory board member that can fill that gap, because there's a lot of folks out there that want to be helpful. You just got to find the right person.
100%. That is 100% true. So Audrey asks a question about whether you should bring the Rainbow Coalition to the pitch meeting. Anybody have thoughts on that one way or the other?
I personally think if you're the CEO of fundraising, you should just do it on your own.
Yeah. I think I would agree with that. Anybody want to jump in?
Yeah, I agree with Tanya. I feel like it depends on the meeting, right? If it's the first meeting, I could create distractions where everybody's trying to pitch in, or there's an excitement, or you could be very nervous, or depending how the conversation is going, that it could be very stressful. And so just managing everybody's stress in that moment and trying to pitch in, it could be a little bit challenging. But I have found that later on, some of the investors we got later on, they did wanted to meet all of our team. So then after a couple of meetings, then we brought everyone in, and everybody got to speak and share and everything.
So let me ask you guys a question about financing structures. So for most of my career, there was really just one kind of startup financing, and that was Sand Hill Road, traditional venture capital, equity financing, and then the seed financing ecosystem, because it was an ecosystem that basically fed into traditional venture capital. Seed was typically structured as convertible notes with the expectation that it would become equity once that first venture capital round was landed. today, there's a lot of different sources and structures of capital. There's everything from Kickstarter and the like to equity crowdfunding, which is a relatively new flavor. And of course, there's safes and there's revenue share financing and all kinds of other things. Any of you have any experience with some of these newer alternative structures and thoughts on them? Then, Ashley, of course, there's also on the grant side, there's all kinds of different kinds of grants these days too.
Yeah,
John,
I can chime in here. I've seen all of that, and I've had that full spectrum because I was at a philanthropic investment platform at Kellogg and at Lumina. So I think you need to figure out what instrument suits your purpose. So, look, sometimes people think, well, I'm not going to give away equity, and revenue-based funding makes the most sense for me. But revenue-based funding isn't cheap either. If you look at the structure, I've seen ones where the return profile is they want 5x the revenue in terms of revenue-based funding. That's not debt, typical debt. You might as well give up equity because they're taking a lot more out of you than traditional equity might be, and not giving as much potential support. So I think you just have to be very sensitive to the details. Now, you may not be as technically sophisticated to understand all the structures. This is where you really need to leverage people who do. And your other investors are going to understand that, right? So leverage them. When I made an investment in a seed investment in a fintech company a number of years ago, they had a very messy capital structure. They had some safes in place with different sort of pre-money sort of market caps. It was all over the place. And as an institutional investor, for the first institutional investor, your value add is just to write the check and watch it evolve, or you can jump in and strategically help that company clean up that capital stack so that other future institutional investors are going to see a clean capitalization table that they can feel more comfortable, because they start seeing some weird stuff in there, they're gonna walk away. So helping to make sure that that entrepreneur knows what they're getting into, how to clean up what they've got, and positioning them for success. Those are the things that as an investor, you might want to look for, right? So as you're an entrepreneur, not every investor is the same. Just make sure that they are aligned with you in terms of what you're looking for and what you're trying to get out of that capital. And hopefully it's a mutually beneficial scenario, and it should be. And if it's not, then that's questionable.
My suggestion is to sort of think through, what is your long-term strategy? Like, what is your plans for the company in 3 years, in 5 years? And right now, at the early stages of raising capital, you're sort of building out that structure you're gonna be able to build up over time. So go with what makes the most sense for where you intend to be in 3 years. So I just closed the seed round and we went with convertible notes because that worked for us, right? And that's a model that investors are familiar with, and we know that we want to prepare for Series A, so we set ourselves up for that. So you want to do a lot of strategic thinking, even going in to fundraising, so that at the end everything's going to work out. And to speak to John's point, it helps to clean up the mess as you go. So that you're not trying to, do it all at once for the next round or for your exit or something like that. Also sort of explore non-dilutive options. Brett brought up grants. There are a lot of grants for startup founders, particularly underrepresented founders. I mean, that's like free money. Go for it, and you can use that money to demonstrate traction that will make you a lot more attractive to get that VC capital. So utilize and maximize all the resources that are available at this time and space for underrepresented founders, so that you can prove and validate your model, which is really required in order to get that capital.
Yeah, and I think that sometimes, go ahead.
I'm sorry, Bouquet. I just wanted to add to Ashley's point about grant, because impact investors may be able to capital stack. It's not like you take one structure and that's it. You could take multiple types of capital simultaneously, and they actually may benefit each other. So just keep that in mind as you go out and fundraise. Apologize for interrupting, Bouquet.
No, you're fine. I was also going to say, sometimes these new investment instruments were developed because they were trying to protect founders. right? Like they wanted like more options for founders. They wanted things that were more founder friendly. And I think to myself, well, what if we just gave founders good valuations up front? Right? Sometimes that's what it's protecting against. So it's not that a revenue share agreement would be better for you than taking, a convertible note. It's that you have to make sure that the convertible note has a reasonable valuation cap and a reasonable, you know what I mean? So I think it's pushing for the terms that make the most sense for you. A lot of times that's the best way to protect your business. I'm not saying that the other structures aren't good, but just make sure that you're not being pushed towards another structure because you're meeting with a bunch of VCs that are giving you bad terms. So that's, again, back to our first point of being conscious of who you meet with and having your best interest in mind.
Right.
Yeah.
Ultimately, it's about aligning interests, right? That the perfect structure is one that aligns the interests of the entrepreneur with the interests of the investor. Yeah. That's kind of the bottom line. Maria, I think I interrupted you. Sorry.
Yeah, no problem. On a more practical way, how we went about it, just because as you're walking in, it could be very overwhelming. So somebody already mentioned about having that advisory board. So we went out and so we strategically reached out to someone who had been named, 40 under 40 top lawyers in Silicon Valley to be part of our advisory board. And then we reached out to someone who is an active investor in Series A, and then we also reached out to a entrepreneur has been raising, and so we put them all together to analyze and strategize. And I feel like just having that support help us, and like Ashley was saying, build our strategy, like what would be the right one, and making sure like it's clean, like John was saying, and we're not scaring, but that we're saying ourselves for success on the long run. So having built that advisory board was really helpful, and so we also went for a convertible note on our seat.
So Shuba asks about ageism, since I'm older than the rest of you put together, I hope the answer is no. Ageism is not an issue. I just the other day read that the AARP is putting together a startup accelerator program, so that's pretty cool. So Shuba, I hear you, because I'm certainly at the point in my life where I feel like in Silicon Valley, in particular, what's highly valued in Silicon Valley is the hot 24-year-old, and that's not me. but I think there are plenty of examples out there of people who have become entrepreneurs later in life, raised capital later in life, run successful businesses later in life. I think there's plenty of examples of that. And then Susie asks about sources. You guys have talked about capital sources that are perhaps looking for a particular ethnic group, or looking for women, or looking for this, that, and the other thing. I think Susie, Google is your friend. That in a few minutes on Google, you'll find them.
Yeah. Also, for women, helloallies.com is because we have gotten many grants, and that's one of the sources we use a lot. But there's a helloallies.com. They post so many grants out there. That's where we have gotten all of that.
Awesome.
And then I wanted to add something about that ageism question. So the Harvard Business Review published a study that said the age of the average successful CEO is 45.
Yeah.
So it's not 24, right? Just keep that in mind.
Can I add to that as well? Ashley, that's a really great point. And I actually, to be honest, I would say that that's a lower risk investment from the investor side, because these are individuals who have tried and life experiences, networks. You're literally investing in a lower risk opportunity than a hot, startup that's 24, co-founder or founded entity, because it might be very innovative and disruptive to things in the market, but it's also higher risk. And I always think about, you guys probably eat Kellogg cereal. Will Keith Kellogg founded his company when he was over 40. That cereal company did not start until he was well over 40.
And then his grandson funded the business school that John and I went to.
And very grateful for that.
I think was it the grandson? I think it was the grandson, was it?
I don't know if it was his grandson or his brother, one of the two.
Oh, okay, yeah. So, I often get asked, how do I meet an investor, right? very common question that my Stanford students ask me is, just tell me how I meet an investor. And the reality is that I've raised a fair amount of capital in my career, and I think every investor I've ever had is somebody I either knew socially or was introduced to me by somebody I knew socially. But it's also been pointed out that this is one of the ways in which underrepresented founders can be at a disadvantage, is that, maybe they don't have social circles that will get them introductions to investors. And so I wonder whether any of you have thoughts on that. If you want to meet an investor, you want to be able to talk to some, and you feel like you don't even know anybody who could introduce you to an investor, how would you go about that? Anybody have thoughts on that?
I would say that's where like accelerators and events like this come in handy, because I think events are really powerful. Just being able to speak to someone, to meet them. And I'll say for me, I do try and respond to cold emails. I really do. Like, it might take me 2-3 weeks, but I really do try to answer every single person who emails me. It just takes me a long time. And it doesn't stick as much. But if someone hears me say something at an event, like even today, and then they reach out and they're like, oh, hey, like you said X, Y, and Z. I wanted to follow up with you about that. Or you mentioned this idea. I would want to get your thoughts on something. That usually it's easier for a conversation to start, for us to actually get connected. So I think that's why events are valuable, because it gives you a talking point. And then, in the world of in-person events, you could actually just go up to somebody after and, shake hands, say hi. So that's valuable. And then the events are also valuable and accelerators because you meet other founders. And I've gotten some of my best deal flow from other founders, right? So I talk to a founder and for some reason it doesn't work. It's not a good fit. And they're like, hey, talk to 2 of my friends. And then we end up going with one of them. So I think that founders are sometimes even a better resource for you getting connected to investors than speaking to an investor, which might sound,
Yeah, that's good advice. I had somebody tell me that their fundraising strategy was that they would go to the websites of the VC firms, look at their portfolio companies, and then on LinkedIn, reach out to the founder of the portfolio companies and say, hey, would you mind having a call? I'd love to get your input. And then the founder is able to make introductions for them. That was a nice, simple way of doing it. Makes a lot of sense.
It's a good strategy. I mean, our portfolio is pretty concentrated. We really trust our entrepreneurs, right? We don't invest in a million different companies a year. So the companies that we do invest with, we meet with them all the time. We have good relationships. So I'll trust a recommendation that comes from one of them.
There you
Agreed.
Yeah, I feel like to me it is a hassle and an art to it. So when I started, I had zero connections in the Silicon Valley, in the investment, just in general in the US. And so I needed to start from scratch, all the way from, like you just said, like going through VC's, website, finding the entrepreneur, or attending to these events. Like Buki was saying, I will write down. I make sure if there was questions, I was the first one to ask questions or many questions, so the investors in the panel will remember my name. And so right after the meeting, I will send them an email. I will find the email, send them emails so I could get that. But it has been, I found that cold emails, I do get a meeting, but it doesn't move past that. I did found that intros by other entrepreneurs is the one that get us farther. And
Right.
so I myself, I'm in many different groups. I'm like L-Bank group included, CPG, Potluck, and like all these BIPOC or Latinos groups that I could always reach out with entrepreneurs and get interest to their VCs.
So one of the things I always tell my participants in my accelerator program is that LinkedIn is your friend, and you find people on LinkedIn who look like they may be kind of experts in the field. So Tanya, you've got a fintech startup, so wouldn't take long on LinkedIn to find people in the fintech space. And you reach out to them and you say, I'm working on a new startup. You look like you've got a lot of domain expertise. Would you be willing to have a brief call with me so I can get your thoughts? And your success rate on those cold reach outs will be pretty decent because you're flattering them, saying, you look like an expert. And B, you're not trying to sell them anything, you're just trying to get input from them. And then always end those calls with, thank you so much for your time, really appreciate it. By the way, we're going to be fundraising soon. Do you have any thoughts on who might be a good fit for this, and any introductions you can make? You know, very simple, and asking for introductions will often yield good results. So, John and Maria, you two are both immigrants. So, any particular experiences to share or thoughts around being an immigrant, raising money? John, I think you were a tiny tot when you came, right?
I was. So 81 in Christmas. So yeah, I mean, I think the interesting thing about being an immigrant is there's a resiliency. And I actually, that's a positive bias. When I look at an entrepreneur that is an immigrant, there's a very positive bias because I'm one myself, and I know what you need to do in terms of understanding and navigating some of the obstacles that most folks don't go through. So I do think that having that may be viewed as an obstacle, but I actually view that as an advantage because that is in itself, it's not entrepreneurship, but it is a demonstration of resilience and the ability to overcome obstacles.
Yeah, I agree with you on that resilience. If I look to, South American countries or just my country, it's really difficult to do your daily life. Like just going to the bank is a hassle. Just doing like any small thing. Every time I take my husband who is from France, it's like, why can't it just be simple? So I feel like as your daily life goes in Colombia, you just need to be always thinking outside the box, not getting no for an answer, go beyond and you know that you need to be very, very prepared. But going into fundraising, I think there was one of the things that I was very conscious was I have an accent. I don't fully understand. I know there's many things I don't fully understand because I wasn't raised here or I don't have the full language sometimes. And I did needed to break through my own self-doubt on walking into these meetings of, mostly male and knowing that I had a value regardless how I sounded or my accent or that I didn't have the full scope of the conversation. I do find myself many times where I'm in these conversations that they're talking about just about culture, things that they grew up in, and I don't have much to say in that or participate. And so I learned that I needed to, just get really well prepared when I was walking into a room, further my education, understand better my numbers, understand better my sector. But like John said, I think that makes you a little bit more resilient.
Agreed. So Shubha asks the question about, is it better to bootstrap? And makes me think of my friend Christina Snowball, who's the founder of Farm Girl Flowers, and she tried very hard to raise venture capital, was turned down by everybody on Sand Hill Road. She even had one meeting where she pitched this venture capital firm on Sand Hill Road, and the partner who walked her out said to her, as he was walking her out, said to her, next time you should probably bring your husband along.
Wow.
And the point of the story is that Christina got the last laugh because she ended up bootstrapping instead, and she's now got a company with a run rate of $100 million, and she owns 100% of it. So my short answer to Shubha's question is bootstrapping is always best. It's just a matter of whether you can realistically bootstrap.
Right.
Some companies some kinds of companies lend themselves better to that than others. But anybody else have any thoughts on this topic?
I agree with the lack of dilution and equity. There is a trade-off. Again, if you have the luxury of choosing, right, because not everyone has the ability and resources to bootstrap, but you have to ask yourself the value of capital that you do bring in And it's not just the money, right? It's the strategic, it's the network, it's the time. How quickly can you scale, grow, and execute your business with outside capital? Again, if you have the luxury of being able to choose, those are the things I would think through. I remember there was a company that we had a chance to invest in, and it's been around for over 20 plus years. It's, it's I would call it a lifestyle business and not a venture backable business, because the entrepreneur did not look at the bigger opportunity, right? And those are not investable and not attractive to us, because you're going to want to get the 200 to 300% growth rate. And this company has been growing at 20, 30% a year, which is fine. It's a lifestyle business. And that's the choice that the entrepreneur made. So I think you just got to balance those two areas and which one you want to take, which path you want to take.
So the way I always think about this is that, so historically businesses have always been grown organically out of earnings, right? So you run it profitably and you had some earnings this year and then you reinvest those earnings in growth. And that's the way companies have been built for centuries. And venture capital is basically an invention that allows you to grow at an unnatural pace. And for some kinds of companies, that's a really great fit. So for, Uber and Airbnb, being able to grow at an unnatural pace was kind of essential for them to end up with the market position that they have today. I don't think you could have grown those businesses, organically out of earnings. But there are many other kinds of businesses that you can grow organically out of earnings. And then, as John said, then you just simply decide, do I want to do it that way, or do I want to take outside capital? And there's pros and cons. I think the best, in a perfect world, you're able to make that decision, right? In a perfect world, you make a conscious decision of how you want to grow the company, how you want to bring in outside capital, or if you want to bring in outside capital. And as John said, how that aligns with your personal goals.
Yeah, on adding on that, I actually went to Brett's class at Stanford, and he always suggested bootstrapping. I feel like now looking back, it was a great advice, because I remember being offered capital earlier, and what I was going to give up for my company was almost like, by now have lost completely the company. And I remember Brett saying you could bootstrap as long as we were able to bootstrap for 5 years. And that allows that when we got to raise capital, we were at a much stronger position, and we were able to give what we felt comfortable, not out of hunger or despair, but out of a strategy to grow, as well as being strategical on what type of VCs are you going to raise money from, because there's the ones that they want you to grow really fast. And for us being a mission-driven company, we really needed the right capital and patience capital that will allow us to keep our mission as well as grow. So just understanding that there's also different type of capitals.
Right. I think that's exactly right. And again, at the end of the day, it's about alignment of interests. So you want to structure capital such that your interests and the investor's interests are well aligned. So I feel like we could keep this conversation going for the rest of the morning, but I promised I would keep this under an hour. So I wonder if we have any closing thoughts. I mean, I think there's been a lot of great stuff tossed around in this discussion. We've talked about how to meet investors. We've talked about how to think through sources and structures of capital. I loved Ashley's lead-off comment about it is what it is. So, there is systemic bias out there. We can't pretend that there isn't. But you're better off not wasting your energy moping too much about that, because that's energy that you'd much rather put into simply raising capital and building a business. I think that's really good practical advice. So any final thoughts from any of you on this topic?
If I can chime in. Oh, go ahead, Buki.
No, go ahead, John.
So I guess my only comment would be that there is no right path that everybody should follow exactly, because every entrepreneur has their own circumstances that they need to figure out from lessons learned of other entrepreneurs, what they can take away and apply. But there is no one exact path that you should take. So I wouldn't say, okay, well, that company did that way, that's probably the right way. It isn't. And I think if you just take advantage of all the information that's available out there, and there's a lot more resources today than there were 10 years ago, and they're at your fingertips. So if you're not, taking advantage of that, you're just doing yourself a disservice. So I would just say, take advantage of all the resources, your network and relationships that you can, so that you mitigate your risk and pick out the best things that apply to you to be successful. That's it.
And, for some founders, and I would even say on the rare occasion, they raise capital instantaneously, right? They say the right thing to the right person at the right time, and they're fully funded. But that's really highly unlikely. So, the way I like to look at it is that the flag of success is planted on the mountain of no's. So every no that you get is taking you closer to the summit. So just get out there and don't be afraid of no. Don't be afraid that somebody's not going to get it, because most people are not going to get it. But what happens is every single time that you have an opportunity to discuss your business and to discuss the science behind your business, you're refining that. So you're refining yourself and you're refining the way that you talk about your business. So give yourself every opportunity to get the no, because again, it's getting those no's that get us to success.
Yeah.
Very nice.
I'd say think broadly about who you are and what your business does, right? I think because underrepresented founders don't have as much access to capital and they face all these bias, sometimes it feels like this defining factor, right? And I have this issue too, right? Like I'm like, when I get on a call for something, I'm like, oh, I'm the Black woman on the call, right? But try not to hyper focus. It's hard to not notice it, right? But try not to hyper focus on that. Your business is so much more than your individual identity, like your gender, your race, your immigration status. So make sure you think holistically about what you offer and what your business offers. And when you're thinking about the investors that you contact the investors that focus on, diverse founders, but also contact the ones that focus on your industry, and the ones that focus on your route to market, and the ones that focus on your level of impact. Like all of those things are part of your story. And so try not to be too bogged down by one element of the story. So that's one piece of advice. And then also remember that investors can be wrong. And maybe wrong's too hard of a word, but like, just because someone says no and someone says it's not a fit for them, that's good. That works for them. That doesn't necessarily mean that your business is not a good business and that it won't fit with someone else. So just, everyone has their take, and that's okay.
Yeah, I agree with everything that everyone shared so far. The one thing I'll add to this is that there's going to be some days that you're going to wake up so excited and ready to get it. And there's going to be some days where it's just going to be really difficult, and just understanding that's part of the package. But on the days that it's difficult, I do think it's important to give yourself, one, decide if it's a time where you need to take a break so you don't burn out. But then I do think that, at least for me, it was helpful on the days that, were more difficult, to give myself like quotas. I'm like, okay, I'm not going to get out of my desk today until I send 50 emails or 20 emails or whatever it was. Or, my goal is to schedule 20 meetings for this week. And so I think setting yourself these milestones as you are fundraising can be helpful, and just making sure that you are hitting those numbers, because at the end of the day, it can be a numbers game.
For me, I realized in my journey, I was born and raised in a farm in Colombia, in the smallest states of Colombia. And so I realized that, and speaking to a lot of founders, they get very they don't step because of their background or, so many excuses. I don't have the ecosystem. I don't have contact. I was not born. I don't have the money. And so I realized that our backgrounds, they don't stop us. We stop ourselves. So how do we break through ourselves? Because it is hard to step into these meetings and knowing that you might get a rejection. They might tell you, I have heard many things, so they might, but be able to shake it off. Know that you have a mission, you have a purpose, and you're going somewhere. And as long as you believe it, and you just need to know that it's not a sprint, that this is like a triathlon, and it's gonna hurt. There's joint, there's like pain, there's everything, health going, like everything that you need to endure and persevere to be able to get to the other side. And if you keep that resilience, for sure you'll be in the other side. So just know and own your power.
Very wise words. Thank you all very much. Buki, Ashley, Maria, Tanya, John. This has been a great discussion, and I really appreciate you guys taking the time to join and for offering your insights and telling us about your individual journeys. I think I feel inspired, and I hope our audience did too. So thanks very much to you all.
Great. Thank you.
Thanks,
Thank
everyone.
you.